Hello everyone, my name is John Locke, and I'd like to welcome you to the winning trade from the Pirate Room of the Disney Funhouse. Before we get going, I'd like to remind you that this presentation is for educational purposes only. We're not broker dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you are aware of all your risks prior to placing any trades. Also note, in these winning trade presentations, we are going over hypothetical computer simulated trades and the results. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. Today, I'm here to take you into the realm of high probability options trading, also known as income trading. And this is where we utilize option strategies to make money from the passage of time rather than depending on price movement to make money. What this means is that we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to win all the time, but it does mean that we're going to win much more often than if we're relying solely on price movement in order to make money. And today, I'm going to be sharing with you a very powerful trading strategy that's been working fantastic in the modern markets. The name of this strategy is called the M3.4U. This is a somewhat bullish bias market neutral income strategy that we trade on the Russell 2000. The strategy requires a minimum of $2,500 per trade. The example size that we're going to be showing you today is going to be a $5,000 planned capital. In this strategy, there is no profit target. However, we do have an exit loss trigger of, in this case, $500 or 10% of our planned capital. And normally, on a good month, we would expect to return around 10% of our planned capital or $500 on a trade this size. Of course, you can scale this up to virtually any size you want if you'd like to trade larger. So why don't we jump in and take a look at the strategy. So a little background on the strategy. This M3.4U is the core strategy in our Go membership for our Stage 3 traders in the Trader Success Blueprint. This is a very dynamic strategy. It's relatively simple. It does well in all sorts of market conditions. And this year, trade for trade, we're up or approaching 100% return for the year, which is just absolutely fantastic. So let's take a look at this on our analyze graph, and we'll dig into the example trade. So for those of you who are new, this is an analytical software that's called Option Net Explorer. And the purpose of this software is to show you basically a risk graph of your position when you're doing more complex options positions. So if we take a look here, this upper column shows the expiration date or our option cycle. The tops are in calls, the bottoms are in puts. The strike levels are listed down along the side. We have our mid price for the option. We have our implied volatility for the option, our delta on the option. And then it gives us our position, which is right in here. Currently, the date is August 20th, 2021. We are 56 days to expiration for our October cycle for our M3.4U. Now, along the bottom here, we have our profit and loss. We just entered, so we're basically at break even here. We have what's called delta. Delta gives us, or in theory, tells us the amount of money we will win or lose with $1 of price movement in the asset. In this case, we have a delta of 2.64. We have gamma, which is the rate at which the delta changes. We have theta, which is the value or the projected value that this will increase in or decrease in the position in the next day. And then we have something called vega, which gives us an idea of how sensitive the position is to implied volatility. And in this case here, we are negative 45.5 vega, implying that if implied volatility goes up 1%, we're going to lose $45. If it goes down 1%, we're going to gain $45. That isn't actually true, but that is what those numbers mean. Our current margin in the position is going to be 2,963 right out of the gate here. We have a maximum capital allowed in the position of $5,000. The reality is we're not going to get over 4, and If we take a look at this graph here, what we have is we have the asset price along the bottom, which is a little bit different than a price chart. So our asset price is along the bottom, our profit and loss goes up and down the right side. The dark blue or triangular shaped graph is the value or the projected value of the position at expiration at any given price point of the Russell. So for example, if the Russell expired here, then this position would be up about $3,500. If it expired down here, we'd be down $3,000. If it expired here, we'd be about break even. The reality is, as the position moves around, we're going to do something called adjustments. And we'll talk about those in a moment. Let's talk about the position. This is something called a broken wing butterfly. We basically have a bullish vertical facing here on this side, and we have a bearish vertical on this side that's a little bit smaller. And since one's smaller than the other, it's called a broken wing butterfly. Now, our entry for this position is going to be a 60-40 broken wing butterfly. We're going to model that. We're going to check our delta. So we're going to use this delta number as an adjustment key on the position of when to, how to enter, and also when to move the position around. We're going to do a 60-point lower wing. We're going to do a 40-point upper wing, and we're going to see if we are within delta parameters for the strategy. Now, delta parameters for the strategy in this size is going to be +4 or -3. If we go and we put both of our long strikes here at 2180, we're actually at 4.75. That's too high. So instead of holding the 40, we're going to actually widen it out to 50, and we're going to do that with half of the upper long strikes. And we're going to check our delta again. That brings us to 264. We are within limits. So we're off and running. So from here, we're looking for a delta of +4 to make adjustments or -3 to make adjustments. That's assuming that we're inside the price is inside the upper long strikes. So right now we have two upper long strikes. We have 2180 and 2190. That averages out to 2185. So if our asset price is over 2185 here, our upside delta limit shifts to 0. So let's take a look and see how this goes. So remember, we are 56 days to expiration to start. First day, 42-point up move. We get a bit of a gain here. We're now over the long strike, by the way, so our long strike is 2190, and the asset price is way up at 2231. So now our delta, we're going to be making adjustments to the upside if our delta goes negative here. So let's take a look. Ooh, big day today, 64-point day in the Russell. That's very, very large. We get to September 1st. Okay, so we started this when? We started this on 8/20. We got all the way to September 1st, which is, what, about 11 days. And now our position is negative delta. When our position is negative delta, what we're going to do to correct that is we're going to move our upper long strikes. Remember how we moved the upper long strikes to get the delta corrected for entry? We're going to do the same thing here. Now that we're negative delta and we're above our long strikes, we're going to look at moving this long strike back or rolling it back. When we do that, we want to watch our capital level. If it gets up over 4,000, we're actually going to do a capital reduction technique, which we'll probably do in this strategy a little bit later, so we'll talk about it then. But when I make this adjustment shift, I'm now positive 1.41 delta, so that is good. And this is going to be our new position. So from here to the downside, again, we still have the same positive delta limit of +4, and we have the negative delta limit of 0. So let's move forward. And you can see the price is moving around, but it doesn't make a whole lot of impact on our profit and loss, which is really good. As you can see, the trading strategy is very low maintenance here. We've gone almost a month here. We've made one adjustment essentially. We got this big 35-point down move, which is a pretty significant move on the Russell, and we're still good for our delta range, so no issues there. Okay, so now we get a really good size down move. We are minus 68 points, which is a pretty much a monster move on the Russell. So the market's not slow. The market's moving around here. We're getting, we entered back here. We got this really big up move. Now we're getting whipsawed to the downside, and that's one of the things I love about this strategy is it's generally not too sensitive to whipsaws. As we are here right now, we are too positive delta, so we are going to have to make a correction for that. And we're going to make the same correction we make when we entered the position. We're too positive delta. We're going to move that there. That brings us within limits. Let me uncheck the ignore today's trades here. And this is going to be our new position right here. And we are up, or we're down about $62. We're positive 2 delta. Here is the situation. So let's move forward. Market starts climbing again. And we're back over our long strikes, and we're negative delta. So we're just going to put it back where it was before. So -1. So we got whipsawed twice here. And again, this is a challenge for a lot of types of trading strategies, a challenge for a lot of traders have, especially in this market where we've been getting these very aggressive down moves in the Russell, and then we've been bottoming and getting very aggressive up moves. And as of right now, let's see, we're up slightly. We have to make this adjustment here to get ourselves positive delta. Looks like we're still in capital here. So that is the current adjustment. So let's move forward. We get another substantial up move here, and we get a nice shift in implied volatility that pops our T+0 line a little bit. We're up $221, right? Not bad for a $4,000 to $5,000 position. It's a little right about 5%, and we're negative delta again, so we want to make a correction for that. This time, when we move this strike, we're getting very close to $5,000. We're well over $4,000. So when we get to that point, we want to start taking capital out of this. And we take capital out by rolling up the lower long. When we do that, that makes another delta shift. And a lot of times you have to get a little bit more aggressive up here. And if we do this, now we have our positive delta again, and we're within limits. And our capital is actually a little bit lower than it was before. So we're actually decreasing the size of the trade here. So let's show that happen. And this is going to be our new position. So let's move forward here. As you see, the market's really choppy. We're getting these good size up moves, really big down move, and we really come out of it. Now we have another big down day here. Really not bothering us too much, other than making some adjustments that end up not being necessary. But that happens from time to time. It's just part of trading. So let's move forward here. All right, so let's see. It is the 5th of October. We're down 10 days to expiration. We do take this into expiration, so let's see. We have our delta's flat, which is fine. It's not negative yet. We have a profit of 383. So on a $5,000 planned capital, it's well over 5%. It's approaching 7 or 8% there. And let's move here. We end up getting a big up move this day. You can see we're up 393, but we're negative 2 delta. And we're over our long strikes, obviously. So to correct that, we're going to do the same thing. We're going to bring this in. Oh, wait a minute. Our capital is too high. So we're going to have to come in here, Now we're negative delta. So now we're going to do we're not going to trade all these execute all these trades. We're just doing this in the modeling software. Then once we figure out what we're going to do, we're going to put the trade in as a single condor here. You'd be selling a condor off. This gives us a positive 1.18 delta, gives us an appropriate capital level. We're fine. Let's uncheck the ignore today's trades. This is going to be our new position. We have 8 days to expiration left. Now we are flat delta. Now we are negative delta again. And we're up $450, by the way, so that's almost 10% of our planned capital. That would be a normal good month. So this is it's about an average trade here. The adjustments are a little more than normal because we're getting chopped back and forth, but that happens. Here we have negative delta. And let's see, I chose to end up rolling this one up higher. Sometimes when you don't have any money left in these, right, this is the mid price, there's really no difference in price. There's no significant difference in price between the 2110s and the 2100s. Sometimes it makes sense to arbitrarily kind of roll those up. And our delta shift, our upside here, we're going to need to do this to get our delta positive. And again, we move the lower longs. And this gives us a delta of about flat 0.42. All that really did is maybe locked in the profits on the T+0 line a little bit here. And here we go. We ended up negative delta again. I rolled this down. This is the maximum adjustment on this, by the way. You really don't do anything further than this. And that's going to put us 1.52. So let's uncheck this. And then we're just going to take this into expiration. So there's the following day. And there is the last day. Let me ignore the trades. And as of this, we would let this expire for about $485 profit. And that's going to be just a little shy of a 10% gain on our planned capital. It's going to be more than a 10% gain on the actual capital we had in the position. We never exceeded $4,000, so that, in that case, would be more than a 10% gain. Of course, when we close this here, this is an overlapping trade, so we also have a November trade going along. And this was what our November trade looked like when we closed our October trade. And this trade is still open, by the way. And if we take a look at this trade and how this is doing for November, and I'm just going to go to live. This is what we currently look like in the live markets after adjustments. We just went through the exact same procedure I just showed you on the October position. And as of right now, our November position is up $438 on our planned capital of $5,000. And again, that's close to a 10% return. And we still have 17 days. We may end up getting substantially more than 10%, which is one of the things I love about this strategy. I think we had a bonus month where we were almost 30%. So you got to love that. And for those of you who are wondering how the M3.4U has done for the year, if we take a look at our results from our real-time trades that we cover every Monday morning within our Go membership on our Options Trading for Income webinars, these are the results that we've had for the year. So in January, we had 4.3%, February 4.1%, March 12.7%, April 19.5%, May 17.6%, June 8.9%, July 27%. We had a small lot. We had a loss in August, 11.1, very normal loss, and that was happen occasionally. And then in September, we had a 5.1% gain. In October, we had a 9.5% gain for a trade return of 97.6% for the year. Absolutely fantastic results for a fantastic strategy. And that is the M3.4U, this episode's winning trade. If you like what you see, I encourage you to subscribe today and discover how you too can follow along with this and many other great strategies as they unfold during our weekly trade update webinars called Options Trading for Income within our Go membership. Also, by subscribing, you can learn about upcoming winning trades and also get free bonus material. So this month's bonus for this video is going to be extra special. We're going to be having a live webinar later this month where we get to spend a full hour talking about the M3.4U, the strategy, and how it performs. So make sure you do that so that you can learn more. Also, at thewinningtrade.com, that's thewinningtrade.com, you can explore past winning trades. And if you're interested in improving your trading performance, and who isn't, make sure you get to the Trading Performance Podcast. That's thetradingperformancepodcast.com so that you can find the information you need to skyrocket your trading results regardless of the type of trading you do. If you have any questions, comments, or anything you'd like to see on the next winning trade, please feel free to leave a comment on our videos, and I'll make sure I answer your comments for you personally. Thank you for joining me. I look forward to seeing you on the next winning trade and on the special bonus webinar we're going to be having later this month. Thank you, and trade well, everybody.